Hello and welcome back to the Trinity Student Managed Fund podcast with me, Emanuele Roncalli di Montorio-Veronese, where I speak with leaders in the world of business, finance and technology to give our students a better insight into the careers we may wish to pursue. Today, I'm excited to sit down with Mr. Matthew Theodorakis. Mr. Theodorakis is a partner and co-head of European direct lending in the Ares Credit Group, where he focuses on European direct lending, including portfolio management. Mr. Theodorakis is also a member of the Ares Credit Group's European Direct Lending Investment Committee and the Ares Diversity, Equity and Inclusion Council. Prior to joining Ares in 2010, Mr. Theodorakis was a vice president at Evercore Partners. Mr. Theodorakis holds a BA from Washington and Lee University in economics. I really hope you enjoy this conversation with Mr. Theodorakis. So welcome back to the Trinity Student Managed Fund podcast. And today I have Matthew Theodorakis from Ares Management. So Matthew, welcome.
Thank you, Emanuele. It's nice to meet you and thanks for having me.
Thank you so much for taking the time. So we always start at the beginning of our guest's career. So I'd like to go back to your university days and ask you, did you always consider a career in finance? Was that always the kind of aspiration?
Yeah, I can't say I did. I know a lot of your other guests have said, they were picking stocks when they were 12 years old and other things like that, that they saw a finance career. For me, I was probably more of the typical 18-year-old that just didn't know what he wanted to do when he got older. I think I had a variety of interests. A lot of different academic fields were particularly exciting to me, and math and science being a big part as well through my high school years. But I also enjoyed history. I enjoyed writing. And I went to what we call a liberal arts school in the United States, so Washington Lee University, which provides more of a broad education, more studies in arts and humanities, things like that. And so I was able to get just more experience and more just kind of knowledge. And as I matured and grew, my first 2 years in school, it was less about specializing in something, but it allowed me to kind of figure out what I wanted to do in my life. And I was able to see, at least at WNL, there was a really good feeder into Wall Street. There's the most, high profile alumni of the school were either running banks or running major divisions within banks. And so, the world was different back then. This is now 25 years ago. And there wasn't just as much information. You didn't know a career in finance is not like it is today where, it's great that people like yourselves and podcasts like this allow university students to experience and understand just what they're getting into, what they want to do with their lives and careers. And so I just didn't have access to that. And it was really through internships I had that helped me go, okay, this is what I want to do with my life. And this is what excites me.
And could you talk about your experience at JP Morgan, where you obviously went after university, and I suppose kind of what it was like starting out as an analyst and your kind of journey throughout those early years?
Yeah, sure. So, it was, as I just referenced, I was very fortunate to get some strong internships. Again, the world was different. We didn't have the big internship programs you see with a lot of universities and where kids are getting feeders and have these long CVs. For me, I was working at a moving company for a couple of years, that type of thing. And then I got an internship with a bond trading firm where someone really just took a chance on me, said, I had good grades, I had a strong work ethic, and it got me excited about working. And I was in New York City, and it was just being in that environment, that high-paced, very intense environment. It just fit in well. It also pushed me, which I really enjoyed. And so JP Morgan was one of that classic investment banking type program. I strongly encourage when I speak to university students, and Ares has a great internship program, so I'm constantly encouraging people through that program, but also even high school students. I have high school interns come in as well from local London schools for a couple of weeks every summer, and I try to push them to at least what I had, which was this broad base of a training program. I think it's very difficult to say, hey, I want to get into alternatives right away, or something like that, like an Ares. I think what you can say is, hey, I don't really know what I want to do. I want to experience as much as I can, but also need to just have the building blocks from a kind of blocking and tackling perspective of everything from the basics of, putting a presentation together and putting a narrative together in a Word document to, an information memorandum to modeling and understanding a financial accounting. Because what I learned very quickly was the theoretical things that I learned in finance and economics didn't necessarily apply to Wall Street. The reality of how we value companies, how we, the corporate finance approach to levering companies, that type of stuff understanding how cash flows move between P&L and balance sheet and cash flow statements, all that stuff I needed to learn. So JP Morgan was a great base for that. It provided me not just a 2-month training program to start my career, so I was, up and running when I started, but just the reps, the amount of work that I did got me to a point where, not only was I experienced in a lot of different things, but there was also this kind of bar set from a quality standpoint of this is the type of work that's required to succeed on Wall Street.
So that would be your approach, kind of take a broad, right when you finish high school and go into university, take a broad, kind of open-minded perspective to a career in finance, if that's.
I think so. I mean, finance can mean so many different things these days. It can be everything from, the public markets to the private markets. There's a variety of different verticals, everything from what I do in credit and private lending to obviously private equity, real estate investing, infra investing, secondaries. There's just so many different things that you can do. And so before you can specialize, I think in just any industry, not just finance, it's just good to get a taste of what to do all from an experience standpoint, but also just for yourself. I mean, I think people gravitate. I've got friends that do real estate. I have friends that do infra, do private equity, that are stock traders, bond traders. They naturally gravitated towards that because of their skill set and because of their personalities, and it worked. And for me, credit is kind of where I just enjoyed it. This is something I liked, and it took me a while to get to a firm like Ares, but I'm glad I started with a broad base.
But was that apparent? I know you said it took a while to get to Ares, but was it apparent that sort of credit was your interest even in the earlier days at, say, JP Morgan and Evercore?
Yeah, well, it was interesting. It's like the best laid plans type approach, right? You think you know what you're going to do until it actually happens. And for me, JP Morgan, I was doing M&A in their TMT group, so technology, media, telecom. It was a fairly high profile group at the time. This is the early 2000s. This is the dot-com era. I had a view, okay, I'm going to go into venture capital or private equity and things like, and then the market dried up, dot-com bubble. Unfortunately, 9/11 in New York as well dried up a lot of finance jobs in New York. And so I had to pivot quickly. And I actually wound up going into restructuring, which was a completely different vertical, but it was a very similar skill set to what I was doing from an M&A standpoint and also credit as well at JP Morgan. Um, and that's what I did for a while. That's what I wound up doing at Evercore as well. So even if I had the plans of, hey, this is how I want to take my career, the market changed that. A cycle can change that. I think I have a lot of contemporaries that their life changed through the financial crisis and the GFC, where they may have said this is what they're going to do, and they found another like a collateralized loan obligation, CLO type things. When that dried up, they found a different vertical to work in. So as much as you think you can plan out your career, sometimes you have to be able to move and pivot quickly as the market dictates.
So being very adaptable, not always,
It's,
maybe having a plan, but not always just
I,
sticking to it.
I
Like,
think that's the right way. Again, that's how I live my life, at least professionally and personally as well. I think you can have a general guidelines of what you want to do, but you have to see how it all plays out. But a huge part of finance, at least for me, and now I'm actually coming up on Ares now. It's been 15 years at Ares and next week. When I joined Ares, I knew this is where I wanted to spend the rest of my career. And it took me a while to get to that point. And so I feel like there's this long, it took me you have to experience it. You have to be in the seat and understand, hey, do I like this job or do I not like this job? And I loved restructuring businesses. It was so intellectually stimulating for me, both at my job at CDG Group, which was more kind of operational consulting and financial consulting, to Evercore, which is general restructuring investment banking. It was great. It was a lot of fun. But I do know that I wanted to go to the buy side from the advisory type work. And so that's where Ares was, that opportunity came up and I jumped on it.
could we just double click on Ares for a moment? Could you maybe
Sure.
explain to our listeners that aren't familiar? I mean, I know Ares is a very, well-known name, but could you explain that? And then as a follow-up, what was at that moment which clicked where you knew that, Ares was the place you wanted to work, as you said, for the rest of your life?
Yeah, no, so for those that aren't aware, so Ares is what we call an alternative asset manager. We have right now over $500 billion of assets under management. So we essentially have investor money. We are managing that money and we're investing it in a variety of different verticals. Ares is basically mostly known as a credit house. So we are about 2/3 to 3/4 of our AUM is invested in credit type vehicles, but we also have very strong businesses in what we call real assets, which is real estate and infra, We've got private equity or secondaries and a few other strategies that we explore. But the business was founded in 1997. It's based in Los Angeles. It was created in the US. Our credit business started in 2004, really as an alternative to banks. So if you think about the term private debt, which is now termed direct lending, private debt is a nice complement to private equity. So as the private equity industry grew, so did the private debt and credit industry in these alternatives. And really the accelerant to what has built out these alternatives to other big managers like Ares was the financial crisis. 2007, 2008, as banks suffered, first they were consolidating through the 2000s, but as the financial crisis hit, they either went out of business, were acquired. But the fallout from the financial crisis was not only were a lot of those banks risk off in leverage buyout transactions or other more riskier type investments, if you will, there was a lot more regulation. And so as businesses were regulated more, the capital requirements for financial institutions was increased. That provided a huge gap in financing. So as private equity continued to explode as an asset class, those businesses have to get financed somehow. And that's where financiers like Ares stepped up and raised capital to meet that capital need.
And obviously named after the Ares, the ancient Greek god of war. It's a
That's
very
right.
powerful,
That's
powerful
right. Well,
name.
it is very funny because the original founders are very spun out of Apollo. So it's just another Greek god that starts with the letter A, is the way I think about it. But yeah.
And I suppose also, just kind of going back to you and your career, what are some key lessons from that journey from JP Morgan to, CDG and then obviously Evercore as well?
Yeah, I think it's similar to what I was saying before, was I tried to balance finding opportunities and jobs that I just stimulated me. I mean, that were just, it wasn't just going in, and it had to be something where I was excited about getting in, sitting in the seat and doing the job. And for me, restructuring, particularly at Evercore, I mean, I was working on some fairly high profile transactions through the financial crisis. It just didn't get any better than that. I mean, the restructuring side of things, if you think about it, it's you're faced with a problem, and there's a variety of tools in the toolkit to solve that, right? So if you've got what we call in the kind of term of art is the good company, bad balance sheet, right? So you have a business that may be way over levered, but if there is a good company on the side of it, it was just financed improperly or over time because things evolved and certain things changed with the business, you need to fix it. And so that was every kind of tool and toolkit for me from a skill set perspective, whether it was capital raising, whether it was refinancing debt, whether it was selling businesses and running M&A processes. I absolutely loved it. And so that kind of problem solving approach I really enjoyed. And I've been able to pivot that skill set very well into a credit career at Ares and now running our direct lending business in Europe.
And then I suppose, what do you think are some mistakes that maybe you see from younger people joining firms or at firms now that you think, or even university students that you think are making, even in kind of the decision process of careers and so forth? Yeah.
Yeah, I mean, I think one thing I've been was very good at, and I don't think I did this deliberately, was I always trusted my gut. I tried to take chances in my career because I kind of always felt like, look, as there's always going to be other opportunities. If I get something wrong, I'll figure it out again later. And so I think people get, and this is not people, this is including myself when I was that age, get very worked up and concerned about, oh, I have to get on this track because this is where I want my career to be. And if I don't get into this program, my life's over. That's not how the world works, right? You just have to do what's in your best interest and push yourself forward. And so I took some calculated risks, if you will, throughout my career. The pivot from banking, where again I had a great M&A job, to going into restructuring, which was a completely different business. And again, restructuring was a different world back then. It wasn't as sexy as it is today with distressed debt investing and these huge restructuring advisory shops. It was a very cottage industry, and I got in on the ground floor a little bit and was able to. That was a risk. I mean, that was a bet. I mean, I had private equity offers, nothing that was overly exciting to me because again the market wasn't great, but I did change tact and went there. But same with Ares. I mean, my career at Ares, I started in New York. I was in the U.S. direct lending business for nearly 4 years, and this burgeoning market and was happening in Europe. And we planted a flag in London in 2007. Ares is a house. to build out this direct lending franchise during the financial crisis. So it was kind of crazy that we started a financing business during the financial crisis, but it actually was exactly the right time to do it because it's when the banks were moving away and this business was building out. And so I had an invitation to move over in 2014, really when it took a while for our business to get established in London. And that was a bet for me as well. And so I know I was a bit older in my career than maybe a university student, but I had a very good career in the US. I was working with some of the smartest people I'd ever met and guys that are running our firm now. Very successful, fast growing business. Direct lending, I know, is a very popular term today, but 10, 12 years ago, it wasn't as big as nearly as big as it is today. But I took that bet. I got on a plane and I moved to London, and was very fortunate that I did that. I think I got in on the ground floor of a great business.
And could we double click on say, the 2008 crisis, or even earlier you mentioned there the dot-com bubble. Do you have any interesting kind of experiences or lessons and stories from those times, which you think would be
Yeah, it was. I
quite
mean, it was
pertinent?
crazy. I mean, everything from I was when I joined Evercore was right around when Lehman collapsed, and as you can imagine, I had a lot of friends that were in the finance community, and jobs dried up, things moved, and again, so it goes back to some of the themes I was raising earlier. Was the market's going to dictate a lot of how your career is going to evolve and develop. And so there were people that had jobs that lost jobs, had to change. A lot of leveraged finance bankers that were writing credit agreements became restructuring bankers because of that skill set was very much in need. And so people changed careers there. But sometimes crisis is where you learn the most. I mean, one of the biggest ones I think for me in my career was COVID. We're now 5 years on from where that was, and in my seat at Ares at the time, it was such a challenge for a lot of reasons. Obviously, personally for all of us being locked in our homes, but professionally, Ares has the largest direct lending book in Europe by multiples, I think, I believe, and for us, that challenge was exciting in a sense because no one had ever thought about what happens if your business is closed and how do you fix that or how do triage the issues that come out of that. In fact, when I often joke with our investors, we run sensitivity cases on our investing. We're always thinking about downside risk. We're credit investors at heart. That's what we think about, not private equity. How can we triple a business? It's more about how do we not lose money. That's the ethos of a direct lender. For us at that time, no one ever thought of what happens if your business is closed for 3 to 4 months. And so the stories that came out of that time were remarkable. I had this huge portfolio. I had a lot of different assets which were bleeding cash that were, very fixed cost base and had no revenues coming in the door. And this is everything from quick service restaurants and franchisees to gym chains to dental practices. Everything was closed. And so I spent 3 or 4 months working through probably the hardest I ever worked in my life was 5 years ago during that first lockdown. And it's also the most rewarding. We came out of it in a very good position. We developed some great relationships with our sponsors because we were there as partners for them. Kind of is one of those things where you're sitting and on the battlefield next to someone and trying to help progress with a partner. You learn a lot, you earn a lot of goodwill, and that's what we were able to do in that process. So that when I think about crises, that was the biggest one for us from a credit perspective, and it was probably the one if you will, I enjoyed from a professional standpoint the most.
Could you kind of touched on it there, but could you kind of talk about the difference between a candidate going into, say, private equity versus private credit? Like, what would you say the ideal candidate is for, or candidate, person for a private credit role as opposed to private equity?
Yeah, sure. So, from a private credit standpoint, it is very specialized in the sense you really have to understand leverage finance, obviously, and have the basics down. And so, the way that the actual industry works is it is a very small industry as far as the amount of jobs and amount of funds that are doing, particularly in Europe, right? There's not a lot of scale providers that are direct lenders. Ares is the biggest, and as I mentioned earlier, we do have an intern program. We do have people coming in from university that started over the last couple of years, but I think that is an anomaly in the industry. I think a lot of businesses are fairly small and not as scaled. And so from a direct lending standpoint, we generally are looking for people that have experience in doing this. So going back to my original comments about being in a broader based program. I think the European banks and advisory shops do such a better job of this than the US banks in the rotation programs that they have, where people touch all different parts of they'll do equity capital markets, and they'll do leverage finance, and they'll do M&A, and have these rotations. I didn't have that. I kind of just did one thing, and I wish I had the opportunity to do more stuff. So when we're looking at direct lending candidates, I'm trying to find people that have the basics of, everything from what you need for the job, which is, honestly, modeling, the ability to understand how cash flows work, the ability to move quickly and work hard in those situations, because is an urgency to direct lending. This is not a it's not a sleepy industry in the sense of syndicated loans where you have a deal and you decide, well, hey, do I want to do this deal or not? Do I want to take a ticket in a 500 million loan? Yes or no? This is, hey, here's an investment opportunity. How do we not only do we like it from an underwriting perspective, but how do we structure it? That's a lot of work. And so finding someone that is very dynamic, that has just the basic experience. But the biggest thing I've seen from a success standpoint is people that can multitask. I know it sounds very simple, but you'd be surprised with a fast-paced environment like this, organize people that can understand priorities and manage 6 to 7 things at once. That doesn't mean pile up on a desk and stay late at work. That's not where I'm going. I'm just saying priorities change very quickly. And if you have the ability to move from one thing to the next very easily, it's an incredibly valuable skill set.
I suppose that's a key skill everyone is learning now at university, especially the younger years. This just came up
Yeah.
recently, and I suppose as well because your career has touched New York and London. This is another area of interest. I mean, could you talk a bit about that experience and what is that like? I know we have a lot of people that are keen to go to New York, hence working for an American company. Yeah.
Yeah, for sure. So, I mean, I'm a native New Yorker. So for me, leaving New York was not an easy decision. I've got family that I'm very close to, and friends and things like that. But it was, from a professional standpoint, again, it was actually interesting for me, and this goes to the risk-taking perspective. I was doing very well in a very strong business, and I just felt, let me go try. What's the worst that can happen? I can move over to Europe, and I'll get a good experience at a minimum. And but there was some concern for me of like, hey, I know this business, I know this industry, I know how financing works in the US. Is this going to be different in Europe? It's actually remarkably similar. The basic skill sets are the same. The way we finance, I mean, I'm also speaking from an Ares perspective where we created our business in Europe as a copy paste of our US business. So there was a lot of similarity of, how we approach investing, risk management, just the general credit approach. Even the structure of the business with investors was very similar. So the professional side, it wasn't different. The differences in the market, though, are more about the market. I think first off, the U.S. is obviously a very deep economy, well established. It dates back to the late 1990s, early 2000s, so it's been around longer. It's clearly the largest economy in the world and a single currency, which is much different than Europe. And Europe is a bit more on the path towards that, but it's a long way from it. So it's a less mature market. It's not as deep. It's not as competitive. There's not as many financing providers or avenues. So you have in the US, you have what we call BDCs, business development companies from a credit perspective. You've got CLOs. There's just a lot more capital, a lot more competition. In Europe, it's not so much. So if you go back to the comment I made earlier about how alternative lenders like Ares or alternative managers gain share versus banks and advisory firms, well, the reason that happened was because the banks retrenched. Well, that happened faster in the US. So right now, about 90% of leverage buyouts are done by alternative lenders or institutional money versus banks in the US. In Europe, it's probably around 50% in the UK, and it's probably sometimes even less, around 30% in some of the European countries. So there's a lot more to go get. They're less mature markets. So the market sizing is different. The competition is different. The scale of companies is different. What we define as Ares focuses on middle market lending, which can be between 10 to 75 million of earnings. In the US, is probably a little bit higher. The deals that Ares do in the US is a bit bigger. These are just generally bigger corporations. But bringing that all together, as you can imagine, the outputs of that is that if you've got a less competitive market in Europe, generally pricing is going to be a little bit higher. Your risk is perhaps a little bit less because you've got a bit maybe stronger protections in your documents. But there's an alternative message here of the U.S. is a well-established market with a very strong bankruptcy code. And from a credit perspective, those were all strong things. So bringing that all together, I mean, there's a lot of positives and negatives on both sides, but I think in Europe, it's just a less mature market, and there's a lot more to go get. But the last point I have is, and this is a good one, is European businesses and transactions are way more relationship based than the US. Um, you develop our business in Europe has developed because of the goodwill we've created with our partners. Um, Ares may not necessarily always be the cheapest alternative financing solution, but people want to work with people they know and they trust. I think in the US, and I can say this as an American, it's way more transactional. Not necessarily you're just looking for the best deal. And so I feel like in Europe, I've enjoyed it working here a lot because I think people trust they want to find good partners and they want to find, they're not going to kind of grind every single term when you're negotiating a transaction.
That's very interesting. But I suppose kind of the relationship element makes sense. I suppose also language is another key difference. I'm just thinking now in
It's
terms of the
huge.
US, you've got
Yeah.
27 different, yeah, yeah.
It's funny. So, I mean, that's actually a core part, Emmanuel. It's a great point because, and it's something I should focus on is, for our direct lending business, we have offices across Europe. So about half of our business is in the UK out of London, but we've got five investing offices. We're actually about to open one in Milan shortly, in Italy. So we're going to have six European offices soon. The reason we do that is, you can in the US do everything out of New York or LA or Chicago. You can invest anywhere, any state, anything you want. In Europe, we are very strong believers of you have to have local people that speak the language, that understand the culture, that can originate deal flow. Because again, direct lending is the term, it's just what the term sounds like, right? You are actually directly engaging with people and originating loans. You're not just buying something off of Bloomberg or off a screen of a loan that's already underwritten. So to do that, you have to have local people and to go out and shake hands and meet people. But it's also about investing. So, Emanuele, you're going to know a lot more about Italy than I am, right? You're from there. You grew up there, I presume. You know that market way better than perhaps an American from New York would, and you may make a better investment decision because you know that market. And also, if there's issues, you're going to know the local, how to work out something, having that local team. So it's a core part to what we do is in Europe is you just can't do everything, at least from our view, from London. You have to have people that know these countries and cultures better than perhaps than I would.
And then reflecting again on areas, because obviously congratulations, next week it's going to be a decade and a half. I mean, and you just said, that you've been opening more offices around Europe. How has that kind of development of areas been over the past sort of 15 years?
Yeah, it's been
How's
remarkable.
the
Yeah, so when we started the business, my partner Mike Dennis, who's also co-head of the direct lending business, he came out of Barclays, the leveraged finance group. As I said, we planted this flag really we saw the opportunity from the US, or this is before I started, but started this business in 2007, and it took a while. And in 2009, we opened offices in Stockholm, Frankfurt, and Paris. Again, saw the opportunity coming, but it was years before we actually started to realize on that potential. We had the senior leadership in the U.S. had a long-term view. This was not hey, let's hit a hot market. This is, hey, we see structural change in the way businesses are being financed. Banks are going away. It will take time, but it's going to come. And as the financial crisis abated, as you saw that opportunity increase, so did our business. So we've been riding that wave. And so, just to put some numbers around it, we raised our second fund in 2013. It was around 900 million of LP equity. I'm sure you've seen the public reports. Our sixth fund, which closed at the end of last year, is 30 billion of capital. It's remarkable, and a lot of it has to do with we've done a great job and built a track record and a reputation and a brand name, but it's also the market. The financing opportunities are there, and so that's what we're continuing to drive on. So I do think that's just going to continue to increase.
Well, congratulations. I think everyone has seen the headlines on
Yeah,
that as well. So congratulations. It's really incredible especially hearing going from 900 million. I,
yeah.
I suppose, taking the counter on the flip side, what are you concerned about today? What are some, risks you're keeping an eye on or?
Yeah, I mean, well, everything was fine at the beginning of the year until about April 2nd. Things changed a little bit. No, it's funny because I actually was on a panel recently where someone asked me like, how do you respond to black swan events in your industry? You know, these kind of major macro changes. And I said, well, it seems like one happens every year, so I don't know if we can call them black swan events, right? So go back to, when I started in Europe, it was Brexit, and that was a 3 to 4 year journey, and that led into COVID, which was, obviously, as I talked about, it had brought its set of challenges, and then coming out of COVID, they had the kind of reopening of the world and staff shortages at a lot of companies, and the cost to reopen businesses and supply chain disruption, all these kind of macro, just constantly happening, and then the war in Ukraine and the massive increases in energy prices and concerns whether we could heat our homes that winter 22, 23, and then inflation, interest rates. So it keeps happening. There's these major challenges. And so I think going into this year, our hope was, okay, that's behind us. We're now going to a lot of the even electoral concerns in major economies, both U.S., Germany, France, UK. Political situation seems to be stable. We're excited about 25, and then clearly what's happened in the U.S. and the policy changes of the Trump administration has provided its own set of challenges. So I feel our asset class has been tested. This is what I think gets us that 30 billion in A6 is investors realize that what we do is relatively safe. This is what we call, first lien senior secured lending. We're at the front of a capital structure, generally 50% loan to value. These are very well structured, protected loans. They're investing alongside really smart people in the private equity community. We're working with the top tier sponsors. So as long as we can continue to find great assets in very strong non-cyclical industries, we should be fine. But it just seems like a lot of macro challenges keep coming down the road.
And I suppose there's the challenges aside, just to get a better insight into, because I think this is really what a lot of people would love to hear. Junior or analysts working on the European direct lending team or at Ares, what does the kind of investment process look like? What kind of roles and jobs would they be doing and so
Yes,
forth?
that's where that's why I love this business. I think it's incredibly, again, I use the word intellectually stimulating. In the sense of, I wouldn't call it like from my restructuring background back in the day of like, hey, I've got a problem, how do I fix it? But what we do have here is an opportunity, and what do we do with it? So, we will get calls from advisors, we'll get calls directly from companies, we'll get calls mostly from private equity sponsors that say, hey, Ares, we're looking at this deal. We know you guys like this industry, or you're probably a good partner for what we're trying to do from our equity standpoint. There's always that, do you work with banks or do you work with direct lenders? And for whatever, this may feel like more of a direct lending type deal. And how do we finance that project? And so if you think about what we do in reality, is we take in these opportunities and we have to just figure it out. So there's the process of, always credit first. Is this a good credit? So a junior analyst associate at Ares is going to be on the front line of that. Their job is to digest all the diligence, which is voluminous. It's a lot. This is not just like a 6 page memo. These are hundreds of pages of financial analysis, diligence that's being done by the company, financial diligence, commercial diligence, legal tech diligence, if it's like a tech business, all those types of things, and then consolidating that and putting it into a very brief memo to say, here's our credit thesis, here's why we like it, here's what it looks like. And the important part from a direct lender is here's how we're going to structure it. Here's how we're going to price that risk. That I think is the neatest part. So it's not just say, hey, do I like a business? I want to invest in it. Whether it doesn't matter what you are. If you're buying public equities, if you like Tesla, hey, this is why I like Tesla. I'm going to go buy it. But if you were saying, hey, I like Tesla, but how do I structure my investment? That's another level to it. And I think that is where it gets really exciting for the junior teams is you're learning and we have a very transparent process at Ares, our investment committee that I'm a member of. We invite everybody in, so it's not like a lot of banks might be, just kind of a closed credit committee. We have hundreds of people on our call, and we talk about these opportunities, and we try to share our knowledge and experience. I've been investing in credit for a long time, and so have my partners, and so the juniors will have the access to not only helping kind of formulate a debt thesis and an investment thesis, but they're also going to hear us debate about it. And it took me. It was funny when I joined Ares. I was on the kind of advisory side for the first half of my career. This is the first time I was on the buy side, and you just start like a sponge, just taking in all these types of things. And you hear very smart people, very experienced people give their views. And all of a sudden you start reading something and go, oh, I know what they're going to like about this, or I know what they're not going to like about this deal. And that's where I think an experience for a junior that can get into a shop like Gary's or a direct lending position can be really exciting.
What is
What
that?
is that?
Can we have some insight into that IC debate? That cool? What
Yeah.
is you gonna sniff?
For
Yeah,
sure. I love it. I mean, it's one of my favorite parts of the job. It's fairly intense. It's a bigger portion of my job than perhaps it's ever been because we just have a lot of deal flow. And it's a couple of days a week. We've got one actually coming up in a few hours. And that process it's different stages. So like I said, when you first get a deal in, we look at we call it briefing note or an early read, which is, hey, here's the company, here's the industry, here's the dynamic. Hey, should we spend time on it? Because we do get a lot of deal flow. So we see thousands of deals a year. We do a very small percentage of them, like less than 5%, actually 2% last year. So you have to think there's a lot of discretion here on how do we take something forward. Now, a lot of times it's, hey, this is a great business. We may not be competitive in this process. This might be more of a bank deal than a direct lending deal. That part is weeded out very early of like, hey, is this something worth us spending our time on? Because we see so much. And so that's the early stages. And then a lot of it is, I mean, it can get, you know, very, it's fairly animated in the sense of, how do we think about this? Because again, it's not just about whether we like the credit, it's like, how do we protect ourselves? And, we have a fiduciary to our investors that we're not going to lose money. That's why they invest with Ares. They're not investing in Ares to make 2 to 3 times their money. That would be a private equity strategy. For us, they're
right.
looking for a 1.5 times return, multiple return. They're looking for a dividend yield, a consistent capital raise, and making sure that if we lose money, then it becomes an issue. So we are always very focused on the credit. That's how the investment committee works. Is we're credit first. There's a lot of challenging to assumptions, but it's an iterative process. So after that first kind of conversation, there might be another paper which are updates or answers to that questions, and then we have a final paper which are you'd be shocked about how detailed we get. I mean, these are 60, 70 page papers that are take a lot of my time to read, but I enjoy it, which is good. But also our investors, or excuse me, our juniors are doing a lot of great work and putting that together and synthesizing and taking in all this diligence and digesting it and making it palatable so I can make a good investment decision, but also be prepared because I'm going to ask tough questions. And that's one of, I think, the best parts of the job.
That's fascinating, especially how selective you are to go from sort of thousands and only take 2%. But I suppose that's why it's such a rigorous process. I suppose kind of double clicking on that even. I mean, what would your advice be to kind of the juniors in the room to get to the big level, or even people considering going to Ares and thinking about that as something they'd like to do?
Yeah, I think look, the market's evolving. I think alternative asset managers in any vertical, whether it's again in private equity, private debt, real estate, are just continuing to gain share. And so it takes some time to find a job within a firm like this. I go back to the original statements. I think people should just try to experience as much as they can before they try to get into a shop like this. Although we have a fantastic program of bringing in now, we're in our third year of bringing in new talent directly from universities. And you can go on the Ares website and you can read all about that. I strongly encourage your listeners to investigate those opportunities because we're really excited to meet really talented, driven people. But it's one of those things to get to a senior level like it is in any job. It's really good experience. It's doing, I had to work very hard to get to where I am. I had a lot of success along the way, but I was also lucky in a lot of ways too. I joined the right place. I rode the wave. The markets moved the right direction. I knew direct lending was moving and there was a good place to be for a career standpoint. I had absolutely no idea 15 years on how big of a business it would be. I knew our European business was going to be successful. I had no real firm view that it would ever be as big as it is now and how with the types of numbers we're talking about. So there is always that element of luck as well.
And focusing on the point of talent, I mean, for you, you're interviewing someone, how do you identify talent? And yeah, what are you kind of looking for? I know you've kind of touched on some key qualities earlier in this conversation. And
Yeah, it's funny. I think one thing maybe doesn't get focused on enough is differentiating yourself. And so going back to where I was telling my story earlier was there are hundreds of thousands of finance majors in the United States that are looking for jobs on Wall Street, right? That's just that it's a numbers game. And you have to, in an interview, there's a ton of smart people. There are a ton of smart people I went to school with, but also obviously from other universities. And so if they're meeting 10 or 15 people, how do you position yourself differently? Well, clearly your work experience, your grades, all the basics are important. And you can just see things like what you do, Emanuele, like your student fund, like that's great to see. It's great to ask questions about. It's a wonderful experience. I love people that have extracurriculars, whether it's things like that, but also obviously, sports and other clubs and things like that. That's always exciting. I think one of the biggest things I was able to do was actually make a connection with a lot of people that I was interviewing with, because when it comes all down to it, we spend a lot of time in the office together, right? There's a lot of time as a team. These are not direct lenders, and a lot of alternative asset managers are not big businesses, right? So we don't have armies of people like a bank does. You're not a cog in the machine. In fact, we're fairly small for the amount of capital that we manage. We're looking for good people. We're looking for culture and first, and the that's what's made Ares so successful. I strongly believe this is the culture here. I think we're generally very good people that are actually very smart and driven and do well in their jobs. And what we're trying to do is continue that pipeline of finding very talented but good people as well, and people that you can connect with. So if you are spending 10 or 12 hours a day with someone at the office, um, you want it to be with people that you really enjoy. And so I know that's tough for a lot of juniors. To make connections, particularly someone that's more senior, but they have to find ways of just being themselves and getting to know people and ask really thoughtful questions, not the ones that are probably on some internet bank or something where here are the 5 questions you ask in an interview. It's more of a, hey, very thoughtful, hey, this is what I want to know. And when I hear stuff like that, that is very organic and people that really want the job and are, I'm not a person that is because I worked in this environment where people are working 12, 15 hours a day. I don't want that. In fact, it discourages me when I hear something like that. What I do want, though, is someone that is going to run through a wall and try to do the best they can. And that comes across. People can say whatever they want. I think when you can make a connection with an interviewer, again, if you have the prerequisite grades and background and everything else, that connection matters. And so people should be encouraged to try to, I know it's tough. I did it myself. I went through the Super Saturdays. You get through 10 interviews a day. It's really difficult to do that. But as much as you can, try to find ways to do that. But also, I think there's a huge thing is there is so much information in available to prospective candidates. You go on Ares website, you'll find white papers about direct lending, you'll find things about the markets, you can read all about what people do. Podcasts like what you have is fantastic. I didn't have any of these things. I wish I did. I wish I had access to that information. So you can very clearly discern when you're interviewing someone that's done their homework. And yeah, of course, everyone does it, but actually, and by the way, anyone that comes in and pretends they're an expert, I'm probably going to turn me off either, too, right? Because I'm still learning on the job now, 15 years in. So bring that all together. I think if you can find a way to come across as sincere, something that you really want this job, it's not just one of 7 that you're applying to, that you've done your homework on the firm, and you ask really good questions. I think all of that's incredibly important.
That's really good advice, especially going on the website there if you're applying to Ares and checking out, the white papers. So being authentic and doing your
Exactly.
homework there. I suppose kind of looking at advice for students directly, if we were to turn back the clock to a young man, if you were to give yourself a piece of advice, obviously you've had a very successful career. But is there any, what advice would you give to a 20-year-old in university now?
I know it's so easy to say from my position and where I am in my career, but try to enjoy it. I think people get too laser focused on I need to do this, I need to get into this program. It's incredibly, my life is over if I don't do it. It can't be like that approach. I think you have to have a very open mind. If I can impart any knowledge in this entire podcast, it's that I've kind of rolled with things. I went with my gut on a lot of decisions. I had some challenges through my career. I was able to overcome them through either hard work or just pivoting quickly and taking a bet and taking a risk. Um, I mean, specifically for people that are 20 years old, I'd want them to enjoy their life as much as possible. I started my career weeks after I received a diploma, which, and I didn't stop afterwards. So, I think the younger generation does a much better job of balancing, finding ways to travel and enjoy their lives than perhaps we did 20, 25 years ago. But yeah, no, look, I think there's so many different jobs in finance. If anyone says I want to be a direct lender, I challenge that a little bit. I'd say you have to understand what you want to do with your skill set. You can say, hey, look, Ares looks like a great place to work, and I'll take that all day because it is a great place to work. I love every day I'm in the office, which is exciting. But to say, hey, I've got this real nichey thing that I want to do, it's tough to say that when you're 20 years old. I think you have to experience life and go back to the first thing I said to you, Emanuele, about my first experience was going up to the 40th floor in a building in New York and being around a broker culture and going, oh wow, this is exciting. Um, I can't say that I knew before that I want to do that. So people have to actually sit in the seat for a little bit and then they can understand what they want to do.
I suppose as well, it kind of touches back to your IC point. That there's so much information out there, and especially when you're going through that rigorous investment process. I mean, what is your approach to even filtering information? So when you're reading, when you're doing this research, it's a lot more refined. What would your kind of advice be to that approach? Because I'm sure you've done so many reps and reps, you're able to just way more efficiently. I mean, what is your
It's a fantastic question. And I think you answered your own question at the end there. It's honestly experience and reps. I can, I read every word of every paper that's put in front of me because I know someone worked really hard to put that together. It's just something I'm incredibly consistent about, and I think that the juniors appreciate that. They know that they write a 60-page paper. I'm going to read page 56 and go through the footnote. Just because someone worked hard to do that, and it's important to me. But also again, as a person that manages a business, I owe that to our investors that are entrusting us with their capital. Um, but yeah, no, I think it's just from experience. I've gotten to the point now where I know the red flags and what I need to look out for. What we do in direct lending is incredibly specialized. There are industries that we know well. Our track record, we've been doing this for 20 years. I made this point earlier, but a lot of people think of direct lending as something new. It's not. I mean, it's something we've been doing for over 20 years in the US and about 18 years here in Europe. So I kind of seen a lot of these films. I know how they end on a lot of things, good or bad. I can tell what kind of risks to look out for, how to structure something to protect us against a potential issue. So yeah, a lot of it is just experience, which is again going back to the point I made earlier. Ares as a whole, I think, has a tremendously open and transparent culture in the sense of we want all these people on investment committee because they want to hear us debate things. We don't always agree on everything. And hearing, it's a healthy debate. It's not vicious or anything like that, but it's good for people to hear, very smart people, very experienced people say, hey, here's an issue I'm struggling with, and someone saying, oh no, this is why I'm comfortable with it. Here's the mitigant. That type of back and forth, that volleying of issues is incredibly important. And so I think, yeah, that's the way we focus on it.
I think everyone listening would love to be a fly on the wall in that weekly, invest in
Yeah,
that meeting. I suppose as well, looking at reflections, are there any books or interesting reads you'd advise a university student to read now, which maybe played a part in your success and
yeah. I
after
mean,
university?
mine is kind of more cliche, which was, I read Barbarians at the Gate when I was a junior in college, and that book just honestly did change my perspective on everything. It was so captivating. For those that aren't aware, it's the story of KKR and Enforcement Little acquiring RJR Nabisco and that kind of the early days of the private equity community, and how that all evolved and the deal making process and the detail they went into of thinking about changing how valuations moved and how they changed their assumptions and how the kind of stakeholder management and game theory, all that stuff that is still applicable today. That just got me so excited. I just thought it was like a lot of fun. It was like something that I wanted to be a part of. And so I just think that's just a great like read. I call it a beach read, whatever you want. I think it was very interesting, but I would focus on if you are interested in these industries, there's again, I just didn't have this. And I think again, I want to give you credit, Emmanuel. Podcasts like this, and I've listened to a few others, are just so fantastic. Just hearing from different people in different walks of life and that have different, whether they're bankers and financiers or they work at corporations where they've been doing all different things for 40 years. There's just a lot of great voices out there where if you can pick up some nuggets throughout that, I mean, it's just incredibly valuable. But it's also, to what I was saying before, if you are looking to meet someone, at Ares or any other great institution that is something you want to do, doing as much homework, reading through the financial statements, finding the presentations. We're all public companies. There's so much great information out there that if you show up to an interview and you didn't know how much AUM we had, or if you didn't know how big our business was, or you didn't know that we raised this fund, I would be disappointed, because I'd say that information's out there. If you really wanted this job, you would have gone not very far. I mean, it's honestly, it's clicking on a website and downloading something and understanding it. That's important. But at the same time, having the humility to say, I don't fully understand how this works. I think I know. That's great too. There's nothing wrong with that.
I mean, that we could spend, so many hours diving deep, even talking about kind of the intersection of AI into direct lending and how that would change.
I love that subject, by the way. I love AI. That's one of my favorite things to talk about. We'll have to do that another time.
Well, it's been fascinating to, not only hear your story, but also kind of getting an insight into Ares, and what that would look like, especially for people, that are considering applying. And, Barbarians the Gate, I think they actually made that into a movie, if I'm not mistaken, as well.
I watched the movie there shortly thereafter. Yes, it's a great film too.
So there's so much advice and wisdom here to kind of give to our listeners. So Matt, I really appreciate you taking the time.
It was great. Really nice to meet you, and thanks again for doing this.
Thank you. You have been listening to the Trinity SMF podcast. You can find more of this podcast on our website, www.trinitysmf.com, and follow us on our social media to find out more about the podcast releases, upcoming events, and much more. Thank you again for listening, and stay tuned.